All right, so let's look at the next example. Okay, so now we have 2nd July, right? And what we can see here, guys, is this channel pattern going on here, right? So Nifty has just been trading in this consolidation. Okay, and these are the best times to trade this strategy, right? Because usually when there's a consolidation, there is a breakup, right? Either towards the upside or the downside. And that is when we can get really, really good entries and good moves, right? So this Bollinger Band will ensure that we get good entries. So let me quickly add the indicator. And let's see what opportunities we can get for the next day, right? 2nd of July. Okay, so this is the candle opening. Let's see if we get a breakout. Okay, so finally we've gotten a breakout here. Okay, go one candle back and we can see this here, guys, right? This can be our trigger candle. Okay, this can be our entry setup candle, right? We've got a nice big red candle. Okay, it has closed below the lower band, right? RSI is now slightly below the 40 level. Okay, so we can enter below this candle low, guys. Okay, this can be our entry, right? And if we get a break of this channel pattern, we can get a really, really nice down move. Okay, and sometimes, you know, if you really want to see where price can head towards, right? As we learned in section 1, you know, you use your technical knowledge, right? So let's say if I connect this swing low to this swing low here. Okay, so this is telling me that if price does break this channel pattern, this rising channel, there are possibilities it can fall towards this trend line, this lower trend line. Okay, so holistically on a larger level, that will be my final target, right? But as usual, if you're trading multiple lots, first book at 20 points and then you trail the remaining. Okay, so we enter below this candle low, right? Now guys, if you miss this candle low, okay, you can take it below this candle low as well, right? You will be missing out on a few points, but you can also take it below this candle low. All right, so first target is of 20 points, which is right here. Stop loss we can keep at our swing high, right, which is around 20 points. Okay, so our first target is done of 20 points. Now we can either keep trailing at these swing high. Okay, if you're still holding on to the position, and eventually, guys, remember this lower trend line is our final target. Why? Because it's a major support trend line. So I do not want to hold beyond that because there are good chances it may take support here and bounce. Okay, so if it comes near to this trend line right here, I will book my full profits. Okay, and if you go to see, guys, that's around 40 points. Okay, which is fantastic intraday, right? For intraday, that is fantastic. And as you can see, price reversed exactly from there. Okay, so we got one trade in this example, right? Easy 20 points, and if you trail, you can get around 40 points on this trade. Okay, now guys, there might be days where you don't get trades, right? Where you don't get trades the entire day, which is absolutely fine because we want to avoid trading, those days. Like if you look at this particular day, first of July, right? We did get some entries, but it was not based on a technical breakout, right? It was just entire day, you can see it was just trading sideways, right? So we want a trigger. And what do I mean by trigger? A breakout like this. That will ensure that yes, we will get a follow through move when it does happen. Okay, right? So if we're just trading it, on the base of this single strategy, the Bollinger Bands, it's not going to work, guys. It's not going to work. Okay, as you can see, we got many entries here. We got an entry here. We got a long entry here, here, but most of them failed. Why? Because we didn't get a trigger, and our trigger is our technical breakout. Okay, so when you combine these factors, this strategy works beautifully well. Okay, so thanks for watching, guys. I'll see you in the next few examples.